The problem is that every trader thinks that the market is the enemy. You know, the big institutions, the algorithms, the news, the sudden reversal that happens the moment you enter a trade. But what if the market is not your biggest problem? What if the real threat has been with you your entire life, sitting behind your eyes and reacting to every candle, interpreting every loss, whispering every impulsive decision? See, your brain does not care whether you become a profitable trader or not. Its first priority is much older than the idea of money, right? It wants to keep you alive, and in trading, the instincts designed to protect you can slowly destroy your trading account. So imagine this. You take a trade, follows your plan. The setup is an A plus clean setup, right? Your entry makes sense, your stop loss is placed, and your target as well, and your risk is controlled. Then what happens? Price turns against you, your stop gets hit, and then you lose. Nothing dangerous actually happened. Like, you still have food, you still have shelter. Like, your life hasn't really changed, but your body reacts as if something is wrong. Your heart rate rises, your breathing gets tighter, your shoulders tense, and then the thought begin. Take another trade, get that money back. You were right, you just entered the trade too early. Like, you can't end the day red, right? A few minutes before that, you were calm. And now you're clicking without even confirmation. You increase your size, chasing price, breaking rules that you created when you were thinking clearly and calmly. Then, and then after the session, like, you look at your trades and ask, yo, why the heck did I do that? And sometimes, let me tell you the truth, like, the answer is uncomfortable. Like, for a few moments, when that happened, when you broke your rules, like, it wasn't you that was trading the market. You were just reacting to a threat. That was your subconscious mind, your reptilian brain doing that. See, the trading platform in front of you is modern, right? It's something that's created today. The exchange, the forex exchange, the stock market exchange, the futures exchange is modern. The data is modern, but the brain interpreting it is ancient. And for most of human history, survival depended on reacting quickly. Imagine one of your ancestors walking through a forest. Something moves in the bushes, maybe it's the wind, maybe it's a small animal, maybe it's a big predator who wants some dinner. And the person who stopped to carefully analyze every possibility may not even survive. And the person who reacted quickly immediately had a better chance of surviving. Back then, it was better to run first, think later. And that system was so much useful when danger had teeth, like when you got some predator, a big monster trying to eat you for their dinner. But your brain still uses a similar system today for trading. And it doesn't work that way. See, the difference is the predator has been replaced by a red candle, right? By a candle that's going the opposite of your direction. And the forest has become the charts. And the threat is no longer a physical danger, it is uncertainty, it is loss. And the feeling that you're losing control, your brain is not broken, it's just simply outdated. It's using survival instincts in an environment where survival instincts often produces terrible financial trading decisions. You see, one of the strongest forces in trading psychology is called loss aversion, right? In simple terms, losing money hurts more than winning the same amount feels good. A $500 profit can feel satisfying, right? But a $500 loss can stay in your mind for the rest of the day and sometimes for the rest of the week. You see, that emotional imbalance explains so many common trading mistakes. It explains why traders move their stop loss. Closing the trade makes the pain real, so they delay it. It explains why traders hold losing positions for way too long. Like they're not waiting for a better setup, like they're waiting for emotional relief. It explains why traders take profits way too early. Like the fear of watching a winner become a loser becomes stronger than the desire to following the original plan. And this explains revenge trading. Like after a loss, the next trade is no longer about opportunity. It becomes an attempt to erase discomfort. The trader does not simply want to make money, he wants to feel whole again. And that is a dangerous reason to enter a position because the market does not know that you are frustrated. It does not care. It does not know how much you lost. It doesn't care whether you finish green or red. The market is not offering you some kind of emotional recovery, right? It's only offering another uncertain outcome. You see, deep inside of your brain, there's a structure called the amygdala. You can think of it like an internal alarm system. Its job is to detect threats and prepare you to respond. You want to fight, you want to run, maybe freeze. And when that alarm becomes active, your whole body changes. Stress increases, your attention narrows, you become more sensitive to danger. And at the same time, the part of your brain responsible for planning, patience, and self control can become less influential to your behavior. And this is why you can feel like two completely different traders, right? Before the market opens, you're calm and rational. You understand probabilities, you accept that losses are part of the business, and you know your maximum risk. But after losing two trades, you become somebody else. And the calm version of you says, wait for the setup. And the emotional version of you says, enter now before it moves without you, right? And the calm version says, your daily loss limit has been reached. That's it, no more. But the emotional version says, one more trade, I gotta get this right. And the calm version understands that one losing trade does not matter. See, the emotional version feel as if the entire future depends on the next 5 minutes. And it's not right. We can't depend on that. And this is why knowledge alone is not enough. You can know every single rule, you can understand risk management to the T, and you can understand your mistakes afterward. But when your emotional state changes when you're trading, your decisions can change with it, usually for the worse. And many and so many traders out there, they respond to this problem by making promises, right? You know, they tell themselves, tomorrow I'm going to be disciplined. I will never revenge trade again. I will follow every single rule. But these promises, they feel powerful when the market is closed or when you're not trading, but they usually made by the calmer version of the trader. The problem begins when the emotional version appears, and willpower is not a reliable risk management system. It changes with stress, and that's normal, like fatigue, fear, excitement, financial pressure, and recent results. And this is why professional environments uses systems. Pilots uses checklists. Surgeons uses protocol. And emergency teams train procedures before the crisis begin. They don't wait until the pressure arrives and then maybe hope that they make the right decision. Like trading should be treated the same exact way. Like your rules must be created before the emotional moment. Like your maximum loss should already be defined, your position size as well. Your stop loss, you should already know where your stop loss is and your target is, and the number of trades you're allowed to take during the day should be crystal clear. Like these rules are not a sign of weakness. They are for your protection from the version of you who appears under pressure. A common mistake is believing that successful traders feel nothing. No, that's not true at all. Like that they never experience fear. Like they never feel frustrated. They never feel tempted to chase. And honestly, like that's not even realistic. Like the goal is not to eliminate emotions. The goal is to stop treating every emotion like an instruction. Fear does not always mean exit. Excitement does not always mean enter. And frustration does not mean increase your size. And boredom does not mean that you need to make a trade. And emotion is just a signal. It's just there. It's not a command that you should be doing things, that you should be entering a trade. The skill is creating space between what you feel and what you do next. And that space may only be 10 seconds. You remove your hand from the mouse, you take one slow breath, you stand up, you read your checklist, you ask one question. Would I take this trade if my previous trade had been a winner? In that question, the answer to that question can reveal a lot. Because if the answer is no, you're probably not even trading the setup correctly. You're probably trading emotionally. So imagine two traders both lose three trades, right? In one session. The first trader becomes angry. He increases his size, takes an unplanned entry, moves his stops, and turned a manageable red day into a devastating one. The second trader feels the same frustration, but after the third loss, he shuts the platform down. He records the trades, protect his capital, and return the next day. So you see, both traders lose money. They lost money, but only one of them protected the future for tomorrow. You see, trading success is not measured by whether every session ends in green. Sometimes the best trade of the day is the one you refuse to take. Sometimes winning means accepting a small loss without turning it into a large one. And sometimes discipline don't even look impressive. It just looks like closing the platform, walking away, and allowing your edge to survive for another day. See, the market is not trying to hurt you. Heck, it doesn't even know your name. It doesn't know your account balance. It doesn't know that you need money. It doesn't even know that you've been losing all week. It's simply moving. The personal story is created inside your head, inside of your mind. This loss means I'm failing. This trade has to work. I need to prove I was right. I can't stop now. See, those thoughts make a random market outcome feel personal. And once trading becomes personal, every loss begins to feel like an attack. And this is when the trader stops following probability and starts defending his identity. And the market does not reward the person who needs to be right. It rewards the person who can manage being wrong again and again, day after day, without losing control. So, listen, here's the conclusion. Your brain is not trying to sabotage you, like it's trying to protect you from pain. And the problem is that trading often requires you to do the opposite of what feels safe. Accepting a loss instead of avoiding it, waiting instead of chasing, reducing risk instead of trying to recover faster, and stop trading when every emotion tells you to continue. And this is why trading feels so unnatural. You're asking an ancient survival system to think in probabilities. Your brain will always react to uncertainty. It will always notice danger. It will always try to protect you from discomfort. But you don't have to obey to that. You can feel fear and still follow your stop. You can feel frustration and still respect your daily limit. You can have the urge to chase and still wait. And in reality, this is what discipline is. Having the emotions, but not following the actions that lead you to destructive outcome.